traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, boys and girls, this is Billy Ray Valentine, 100 South Broad Street, Philadelphia, Pennsylvania, where the Philadelphia Eagles will be playing in the Super Bowl on Sunday against who do they play? Kansas City Chiefs here in Arizona, up there in Scottsdale. Well, actually, Glendale, part of Phoenix, Arizona. And so it'll be a big, beautiful stadium there, actually. But anyway, folks, I've added something to my bucket list. Of course, number one thing on my bucket list was to be able to see sometime on CNBC or Bloomberg or Financial Times News somewhere where they've actually shown that some of these things they talk about with dates and planets and stuff, that these astral cycles that we look at, yes, they do have some predictive ability. Not a lot, but some, and they do work. And the number two that I've added to my bucket list today, along with signing a contract with the New York Yankees to play second base, which is probably far off into the future. But my newest thing on my bucket list is that I don't get any more requests to explain Elliott wave by email, telephone call, carrier pigeon, whatever it happens to be. Folks, I don't count Elliott waves, folks. All I do is AB equals CD. Here is the last 10 days of the stock market's action. I want you to follow me through. You notice that each one of these corrections here was 61% retracement here, 61% retracement here. You can see that we had a big A, B, C, D pattern completing up here, and then we had an A, B, C, D pattern completing right here, both at 618. These moves right here, there's your A, B, C, D to the downside. These moves were almost perfectly equal. All that was doing was showing the symmetry that the markets repeat over and over again, not exactly the same, but close enough. I'm not worried about counting waves of 2, 3, 4s, 5s, or whatever they happen to be. It's that simple. When I look at Elliott wave, they never tell you to buy right here and put a stop right there. That's what I have to do. I said if you're going to be looking to buy the market today, the number was 1410. The low was 1404, and it's rallied 30 handles. Now, the 382 on this number comes up here to 4039, and we've only been to 3045 so far today. So let's try it again. 30, 40. Well, maybe that'll be the fourth thing on my bucket list. The 382 on this number is 4039. So far, the high in the S&P has been 4035. Now, what we're going to do now is, because I follow the Dow Jones and I follow all of these other things as they're looking at, I want to be able to see what they're doing. First of all, what we're going to do is to look at the NASDAQ. And if you'll see here on the NASDAQ, we completed a very nice ABCD pattern here in the NASDAQ this morning, and you'll be able to see the ABCD pattern right there. Now, the other thing that we look at is we look at to see whether the market can make 382 retracements. That's what we're really trying to find out, is if we can do that, then we have a pretty good idea that we're going to have a pretty good shot. So the first one we're going to look at here is the E-mini S&P, and I'll show you that number right here. You'll see the big move to the downside, and get it up there so we can, there you go. There's your 382 coming in there at 4039. The host so far today is 4035. Now, the Dow Jones Industrial Average, which has been the leader of the pack most of the time on the way up, has already made the AB equals CD pattern. Let me get this up here, and you'll be able to see that. We just made it just a little while ago. And hold on one second here. Now, remember, the Dow Jones, folks, is really not a very good one to trade unless you're trading about 10 stocks in the Dow. The reason why is, folks, it's price weighted and not cap weighted. Cap weighted means you take all the shares divide it into the amount that is outstanding, and by golly, that gives you your price and what the actual capitalization is. This just tells you the price of the stock. It doesn't take in the number of shares you have. So anyway, this is why we're looking at it right here. There is a number here in the Dow Jones as we're hitting it just now, just a few minutes ago just a few seconds ago at 339, I think it was 339.45. 349.40 is what the number we were looking at right there, and we just hit that number spot on. Now, whether that's going to be a number that's going to last for quite a while, I'm not sure. But you know what, folks? All I know is that when I see that, I don't have to worry about whether it's a 3 or a 5 or a 2 or a 6 or whatever those Elliott Wave. And I have nothing against Elliott Wave, folks. They use Fibonacci the same way that I do. You know, they just count waves in an obscure way that I don't think is correct. I think the waves are like what Mandelbrot said in his fractal analysis, that it's basically the lightning bolt, AB equals CD. So it's a 3-wave pattern, not a 5-wave pattern. Now, I can't go against Mr. Prechter because he has an IQ of about 3 times what mine is, but I've got a lot of experience, and I have experience, and I can see AB equals CD very, very easily, and that's all I really need to know. I used to have a trading room up there in Pismo Beach, California, where a lot of these guys would come in and visit me, you know, Bryce Gilmore, Bob Miner, Glenn Neely. I mean, there are so many of these guys came there. They were all talking about the 3s and the 5s and the 2s and the 1s and the 4s, and I'm sitting there just basically trading AB equals CD, living the dream, and it worked well for me, and I just keep it as simple as possible. That's really all I'm trying to do. Nothing more, nothing less. Now look at today. You talk about AB equals CD. You know, you don't have to be a rocket scientist to figure this one out. So here's the ABC. Now all of them made the same number. We showed you the S&P at 40.10. The low was 40.04. Look at the Dow. Look at the Nasdaq, folks, right to the tick. That was the ABCD over the last several days of trading. Look at your 78% retracement up here. You don't ever see 78% retracement or 1.27 on a chart for the Elliott Wave, folks. Those are the square roots of the Fibonacci numbers. These are the roots of where these numbers come from, for heaven's sakes. Now look what you're looking at right here. You see this ABCD pattern right here? We came within 10 points of that about 2.5 hours ago. And then it's been backing off ever since. So the Dow's been leading the market up, and these have been following along. And that's been going along for a long time. So what we're watching here is just showing you how these ABCD patterns line up, and that's what we're trying to do. By the way, on Wednesday at 11 o'clock Eastern Time, from 11 to 1, if you go to the Money Show Virtual Expo, I'm going to be doing a 2-hour presentation of where these patterns come from, how they work, where the numbers come from, and we're going to look at a couple of different markets that people might have questions about, maybe make a prediction or two, but that'll all be free, and we're going to be doing that, and we'll be getting some good business here for TFNN, maybe getting few new people into the den. But I've been working with the Money Show people for 20-some years. I was the first person, believe it or not, that Jim Sugarman and Tim Borkman asked to speak in 1999 in California. I showed up in Bermuda shorts and a polo shirt, and there were 2,500 people there. I almost fainted. Hey, we're going to take a break. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart of the gold market, folks. This is just a 15-minute chart, and you can see the $100 drop that we had in the gold market. This was actually a slightly lower high at 1930. The high was 1975, but this was the place where it went sideways for so long. But if you'll notice last night, and we did this long before it happened, folks, all we were saying was that we know when markets drop a lot, they have a tendency to rally back to the 382 retracement. Do they do it all the time? Of course they don't. They do it some of the time, but some of the time is all we really need to do. That measured to let's try it again, Larry. It measured to 1841, okay? That's 1844, and it stopped right there at 1844, right on the money, and then it broke down and made new lows. Well, if you missed that one, you could have done another 382 pattern right here. And these are shorter term patterns, but they're very simple. You don't have to do anything mysterious about, moving averages or anything. You just sell it at the 382, and you put your stop somewhere above here, above the 50% level. And this has already made, well over $2,000 today, because we took out these lows a little while ago. So it's already made $2,000. So you certainly locked in at least $1,000 on something like that. So those are some of the things that we're looking at, and we're going to be doing some of these live very, very shortly. Now, let's get talking about something that's in the news, and I know a lot of people don't believe it, but it's Bitcoin, and I want to get this up here because, folks, this is a major thing here that we're seeing here in Bitcoin. Give me 1 second, because if you like these patterns, this is going to be one that will be jumping out at you like a rattlesnake up there in Sabino Canyon. Hold up here. Get this. There it is right here. You can see here on the way down, you can see the large A, B, C, D pattern coming in. Bottoms in right about here. Then it has a very strong rally. You see right up to the 61% retracement of this move right here. And then it makes this very, very, now this looks like a butterfly, folks, but it's actually a Gartley pattern. The difference is the butterfly is going to go up here and make a higher high. So a butterfly is a Gartley pattern that's failed. So this is a Gartley pattern, and it's right here, right at 24,000 in Bitcoin. So as long as Bitcoin does not get above 24,000, this is still ready to pull down just a little bit. So I don't know anything about Bitcoins or blockchains or anything like that. My friend John Jameson certainly does. He keeps me informed of it. He tells me that it's basically the re-engineering of the internet, and pretty soon you won't even be hearing the word internet. You'll be hearing the word metaverse. And John says that'll be the new buzzword for the internet, which will be changed to metaverse. And of course, Facebook is now calls itself Meta. Whether that has anything to do with anything or not, I don't know. But this is a perfect ABCD pattern that you're looking at. This number that you're seeing right here was a 382 retracement of this high right back here. The 382 was brought to my attention 3.5 years ago by Tom Hugard. I'd known of it. I put it in my books, but I'd never followed it closely as I should have, because boy, it really is a good indicator for high profits, low risk, and a high probability of success, folks. Those of you that belong to 24/7 already know that, but boy, it really does have some powerful ramifications. And also, when it doesn't work, it's telling you that there's something even, far bigger coming up. We saw this here very shortly, or just a little while ago, in some of these stocks that have exploded to the upside, like Amazon and what do we have? Amazon and Google and Apple and Tesla and Metaverse, all of those, we were watching those for ABCD patterns, which they did complete, and they were very, very large patterns. So these patterns work on any time frame. What you have to do to decide which one you're going to work with, and that's what you're going to be looking at. So let's take a look at the one that we really liked the best last week, and that was, we talked about it here on the show because it was happening while we were on the show, which was nice of them to do that. They don't do that very often, but they were today, or last week. You'll see here 3 days ago, we were making a perfect A, B, C, D to the upside, okay? Now, the Elliott wave people call that an ABC, A, B, C. Well, there's actually 3 waves here, folks. There's one wave here, one wave here, and one wave here. It's 3 ways up. That gives you A, B, C, D. This is a perfect example of the fractal analysis that Benoit Mandelbrot talked about when he was doing his PhD work and getting all those awards in mathematics and stuff, showing how fractal analysis works in the cotton market and so many other markets too. But that's what he was looking for, was this lightning bolt pattern. This lightning bolt pattern is in Gartley's book, page 220, page 249 and 250. This is an ABCD to the upside, and then there's also an ABCD to the downside. Now, what we're looking at here, as you can see here, we've broken below the 50% level, and we're getting really close to that number we just talked about, which will be 106 in the euro. Now, if you go back and look at this, from this high here to this low here, it's going to be equal to this high here and this low here right here. The difference is this took 2 weeks to make it. This is going to make it in 4 trading days. So this is more powerful to the downside. So we could easily go through this. But easily going through it is not the same as making money. And making money is where you got to put the money in, folks. You got to be able to say, okay, I don't care what wave it is or what pattern it is. How do I make money off of it? So all we do is we take the little patterns that we're looking at, just like the one we've just seen, and all we do is we expand it out a little bit more, and then we go to a 15-minute chart. And this is what I do in the videos every single day. I come in and I bring these up to you. Sometimes we're on the air. We're able to see it, but here's where we were today. You can see here, there's where we were. See there was our high on Sunday, or Friday, okay? We covered it. We sold it back right here at the 382 retracement. It hit it again on Sunday night, I believe. Yep. And then look at this. It just keeps going lower and lower and lower and lower and lower. And that's really what you're trying to do, is to follow along with it and keep the trend working in your favor. That's really what you're doing. I'm not concerned on what you call this thing, whether it's you can call any pattern you want. It doesn't really make any difference, just as long as you can understand the ratios and how they fit together. So I hope that helps. But, I really don't need Elliott Wave. I haven't used it. I've looked at it. I've read it. I was doing it before Mr. Precht does it, but he's smarter than me, so he figured out something that I couldn't figure out. But all I know is AB equals CD, and that works. I don't have to be a rocket scientist to figure that out. It's just not that hard. So I hope that gives you some indication of what we're looking at here. When we come back, we're going to take a look at a few commodities that look pretty interesting, and that'll be a lot of fun to do too. We don't have any guests this week other than, I believe, on Wednesday we're going to have Jeff Huge on, and then on Thursday we're going to have Jim Bartolioni on. Tomorrow I'm trying to get a guest on, John Person, but John's kind of busy. So we're going to take a break here, and we'll be right back, and we're going to talk about a couple other commodities that we're paying attention to. So we'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I had a request to take a look at the Japanese yen versus the dollar. As you can see here, it started to rally. We came down and we made the pattern right here. This is a 3-drive pattern. Drive 1, drive 2, drive 3. You pull up, you pull right back to the 61% retracement. This was the big day we had on Friday with that jobs report, which whether it was correct or not, anybody can take their guess on that. Folks, is regarding those, and I've been doing this for a very long time, and I've seen situations where they come out the following month and they correct it, or the following day and correct it. I've seen it more than once. It's been clerical errors like this. With computers, it's easy to happen, but when they were doing them by hand, and believe me, I'm talking about back in the 60s and 70s, there were a lot of mistakes. But they'll probably change that jobs report from 517 down to 250 or whatever it happens to be. There could be a grammatical error or a numerical error. And believe me, those folks, they are not punished for that. we're punished if we do something wrong, but they're not. They work for the government, so they have a situation where they don't have to worry about being held accountable for that kind of stuff. The one that I remember the most, of course, was the thing in the with the egg market many years ago. I wanted to talk just a moment here about silver because I'm very bullish silver on a long-term basis. But as we look here on silver, now this is the weekly chart that we had here. We've been doing this for a long time. You can see here the 135 pattern that we're looking at right here. This is telling us that we're probably getting ready to top in the metals, which platinum had already topped. Gold topped last Thursday. And, of course, gold was back here at the 78% level, whereas silver was making a 1-3-5 pattern. Those three lower tops, that's right out of Roy Longstreet and Bill Longstreet's trading manual. All I did was showing that those ratios of 1, 3, and 5 are going to be 618 or 78% level. As you can see, silver came within 10 cents of the exact 78% level on this, and then has dropped $2.25 an ounce here, which is a little over $11,000 in a matter of a few days. What's important here is right back here. Remember, this is a long-term weekly chart. Remember 2 years ago when we were down here at around 14 cents, excuse me, try that again, Larry, $14 an ounce in silver, you'll see where it went. Stop and think of this, folks, $14 in silver. Now, when I was, my big win starting this whole thing is when silver went from $1.27 to $4.20. Now, $4.20, that was just an amount. That mean a silver certificate that had a face value of $1 now had a value of $4.20. 320% increase in a matter of a short period of time. If I would have been back in those days and I would have got out at $14, that would have been way over $1 million that I would have made on that short. Hey, I'm not complaining about what I made, because what I made was a lot of money for someone who was 22 years old, and had $60-some thousand in cash. After taxes, of course, but that was a lot of money. You stop and think, $60,000, you could have bought 3, 4, 5 different McDonald's franchises for that kind of money. They were $15,000 a piece for a McDonald's franchise in Terre Haute, Indiana, on Wabash, on Ohio Street, 7th and Ohio. So that's a big. Excuse me, that was 7th and Poplar. Anyway, that was a big thing. So these corrections that we're having here in silver, I think we're going to be looking sometime out in the not too distant future. Not now, but when gold starts going above 2,300, I think we're going to see $75 to $80 an ounce silver. I really believe that. I think it's got that in it. We've had 2 highs now in silver up at $54. So actually 3. We had one in 1988, another one in 2017, and then we had this latest one was up here. I don't know, it was about 2 or 3 years ago. But I think once we get above that $50 an ounce level, it'll be a smooth sailing. Well, there's never smooth sailing, but I think we could get to $75 an ounce in silver. Now, that's long term, and all I'm watching for now is I'm watching for a retracement here. And, of course, coming down as sharply as it did. Whenever you see sharp corrections like this, folks, and the market starts giving you some money, you pay attention, because that means it's probably going to give you more. That's the main thing that you want to be watching. If you're paying attention to that, it's a smart thing to do, because those darn things will literally give you a lot more than what you think they're going to give you. So keep that in mind. Getting back to the gold market, I want to bring this to your attention because this is really important from gold. If you like gold, and nothing has changed in gold other than that number. You can see here this is $100 an ounce, folks. Go back here. Last time we saw that was, whoa, you're talking about a long, long time ago. Back in the days of Camelot. That was a $100 move here. It took about 4 days, but here we did it in 2 days, $100. Now here's going to be where the pedal reaches the metal, folks, right here at this 382 retracement at 1848 per ounce. The reason why is look at all this supply that was up here, that we took that out. that should be demand now, because if we get down here, that's going to be a 382 retracement, and that's going to be really, really powerful. You remember this low right here at 1618? Remember the long-term monthly chart on that from December of 2016, December 2016? Gold was trading at $1,030 an ounce. And from there, we went to, we more than doubled in price. We got to $2,090 an ounce, I believe, was the spot price. So this number that we're going to be looking at 1845, is going to be really, really interesting. Now, my hope is, and I hope is a terrible word for trading it, my hope is that it takes about a week to 10 days to get there, because that's what I'd like to see. I want to see it to take a little bit of time, to get to that level, much like it did here. You see how it took a little time to make this bottom, and then of course we rallied up to a 61% retracement, and then the whole structure of the market changed, and we've been heading down ever since until we hit these levels right in here. I mean, we took this low out here over the last year by about $1.50, I believe. We were looking for 1620. It got to 1618, and from there it had a huge rally. Unfortunately, I didn't make nearly as much off of it as I should have, and I missed this high by $2. That's the nature of trading, but this is what we really need to pay attention to here, folks. Now, this gold here at 1845, that's a major watch list, and I assuming, because we're at 1873 was the low today, we still got another $30 to go. I'd like to see it take at least the rest of this week and early next week to get to 1845. That means there'll be some buyers coming in during these times, and that'll give us a chance to take a look at that level, because that'll be a 382 off of this number right here, and it'll also be 50% off of this 382 number that we had right here. So right there, 1845, that's an exciting number. As I look at these markets this morning, it just really jumps out at me. And, whether it's going to happen that way or not, I'm not really sure, but we got to be prepared for it. That's the real key, to watching these things. It's very, very important that we watch that. I hope that helps. Anyway, 1845, those of you that belong to the 24/7, you'll be getting daily emails on the gold and silver, because we are waiting for a situation where we can get back to the long side, and I think it's got another run to go. We're going to take a break, 877-927-6648. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3x bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this next segment is going to be a little difficult for me to get through because I had a come to Jesus moment, folks. This is a chart of soybean meal. You have a beautiful ABCD pattern up there, as you can see, at $4.95. The high was $5. The difference is $500. Well, when you trade beans and stuff, you got to risk a little bit more than $500. I suggested to put the stop above $500. That usually means 501, 502, somewhere in that. Well, it went to 500.2, so $20 above it. So I assumed that people did put their stop a little bit higher than that, but there were a few people that didn't. They put their stop exactly at $500. And don't ever put it in an exact number, folks. Give it an exact numbers are just that's where these orders set. So anyway, that's the main reason why we said that. I said, now, if you got stopped out, if you came back in on Sunday night, if it opened higher, you could sell it. And by golly, it opened at $4.99 and it dropped $1,200. Now, whether the person did that or not, I don't know. But that's not the come to Jesus moment. I hope I didn't delete this. I thought about doing it several different times, and by golly, I did delete it. Anyway, I can redo this very easily, so bear with me here for just a second. Yeah, this is it right here. Oh, here it is. You talk. When I saw this on Friday after selling the soybean short, a soybean meal short, this is what really, if you like technical now, folks, everybody uses this stuff. This is how the paint on your cars, okay? This is your margarine, your cooking oil. I mean, it's got so many things. Look at the beautiful Gartley pattern up here, a beautiful 382 retracement here, a beautiful 382 retracement here, a beautiful 382 retracement here. And this was Friday, a beautiful 382 retracement here. Hello, operator. Are you kidding me? Look at this thing, folks. Soybean meal was way up here, and I should have been selling the weakest one. This made $1,300 in one day and continued to go down today. So I missed that. And I saw the pattern in meal. I didn't even bother to check it in oil. And I know I've got a lot of things on the plate, but that's no excuse. When I'm trading soybeans, I got to look at beans, oil, and meal because the beans are crushed into oil and meal, and I missed that. And I didn't see it, folks. You're not going to believe it. I didn't see it till Saturday morning when I was doing the charts. I said, oh, my goodness, I have to tell the folks the little goof-all that I had here going. But that, to me, is a come-to-Jesus moment, folks, because that's got everything that I believe in. Look at that. Look, there's your 135 pattern. Each one of them is at exactly 382. And you want to be selling the weakest, so the oil was the weakest one to sell. And, of course, it took out all of these lows. So that was the easy one to do. The meal worked okay, but the oil was the easy one. That's the easy one. Do the ones that are really simple, folks. Now, I'm not going to get involved with that. Nope, not going to talk about you know what. So not going to be a problem with me. No way, Jose. All right, let's talk about your diet, folks. There's one of the meats is still under pressure, and it is really surprising because this is the most popular meat in all of China and Hong Kong, pork and chicken. And as you can see here, we're way down in here with the hogs. Now, cattle are way up into the stratosphere, so the price of beef is going up. And the main reason price of beef is going up because they feed them heavier proteins. But the big thing when you're trading soybean meal, you know what you're trading, folks? You're trading eggs, because chickens only eat soybean meal. Well, they've got a little bit of corn in it, but it's mainly soybean meal. That's where these eggs get all their protein from, is from the meal. And that's why eggs have gone from 79 cents a dozen here in Tucson here about a year ago. I saw them on the store shelf the other day at $5.99. And I understand up in Scottsdale, they got them for $8.99 in some of the stores up there where the rich people live. So when you see prices of hormone proteins going up, it's affected in the egg market. And that's why eggs, it's one of the most perfect foods, is so very, very expensive. So those are some of the things that we're paying attention here as we look at some of these things. And we're going to have more inflation coming, folks. You're just beginning to see, some of the stuff that's going on with food inflation, because it's really quite amazing. Let me just give you an example here. Since we're talking about hogs, let's just quickly take a look here at the cattle market. We should be topping here in cattle this week. You notice here we've got this ABCD pattern here. Here's where we broke out to the upside, and we went up and we made the price objective today. I don't know, I haven't checked the price of cattle, but let me quickly take a quick look and see what they're doing is. And cattle are still up a little bit today. Not that much, but a little bit. So those are some of the things that we're paying attention here to as we watch these things. So I hope that makes sense to you. And I don't want to offend anybody. If I do, I don't do it intentionally. And sometimes I have a tendency to do that, and I don't like to do it. But that's neither here nor there, because I think there's a lot of different ways to skin cats. Oh, that's a terrible. There's the AACP guys are going to be after me about that one. I don't mean that on the literal sense, because, oh, well, let's not worry about that. I'm thinking of my grandfather, a little saying that he made once. I want to show you a pattern here, folks. It's very descriptive of what we go through. This comes from our friend Jeff out in Philadelphia, where he's going to watch the Eagles play, and hopefully it'll be a really good game. I don't really care who wins. Even though my grandsons are very heavily involved with the Eagles, so I have a slight tendency to root for them. But you'll see here, this is a Euro chart. There's the 382 retracement that we had here after the report on Friday. And as you can see, the market has continued to go lower and lower and lower. That's why we came up with that daily chart, looking at the 61% retracement coming in at that 106 level. Now, the key to this is, you see this big wide-ranging bar down right here? That tells you the market wants to give you a lot. So you can almost bet that this ABCD level that looks right here is going to be exceeded by at least 1.27 or 1.618. The reason why is because it's coming down so very, very fast. It's not going to be easy to stop this train on the way down. Just like on the way up, you couldn't stop the train. On the train coming down, it's going to be even the same way. I'm going to be covering some of that stuff on the show on Wednesday for the Money Show. And always like working with those folks. It's been a long, happy relationship over those years. And boy, I have some great stories that I could probably tell. And it was really, in fact, that's where I met Mr. O'Brien, 2001. It was right after 9/11. And we were there, and by golly, that's where I met Tom O'Brien. And, well, that was 20 years ago. Shut the front door and razor in. I've been doing this show for, 16 years now. 3,900 shows I've done, folks. That's hard to believe. Anyway, whenever you see that CD leg coming down like this, you gotta extend this leg by 1.27 or 1.618. If they come down equally, just like we did in the stock market today at 40.10, then that's perfect. That's time and price squared, like what Mr. W.D. Gann talked about. So those are some of the things that make these patterns just a little bit more creative than you might want to think. We're going to take a little break, folks. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted a chart of that E-mini S&P over the last 7 days. You can see here the support that we've made here on this long this trend line, 618, 618. If we close below 40.04 today, folks, that means because we just missed that 382 here, we're going to be looking at a pretty substantial move of more than 100 S&P handles to get it down to this level right here. So this is going to be really interesting. If we go below 40.04, we're going to get down to this level right here, which is a substantial move to the downside. So keep that in mind. And if we keep going, we're going to go up a whole lot. So that's the main thing. That number would be looking at would be 40.55 would be the next level down, which would be the 78% level. That's down 80 handles from where we are right now. So if we get below 40.50, excuse me, 40.04, that tells you that we're most probably getting ready, to go a whole lot lower to the downside. So let's keep that in mind. Remember, my guests here on Wednesday will be Jeff Huge of Alpha Insights. On Thursday, we're going to have Jim Bartleone of Bart's Charts. And on Friday, I'm hoping to have either Mr. Norm Winsky or Mr. John Person. Either one of those two gentlemen we'll try to get on as a guest, and we'll have a lot of fun listening to that. We also want to thank Shane Smolian for the alert of the market getting ready to break the day of the report. On Friday, he said there was so many negative aspects, it was going to be really hard for the market to go up, and boy, that was the understatement of the year, because we dropped 500 points in the Dow pretty quickly, and 100 points in the S&P here in a few days, much like we did in the gold market. The gold market must have been affected by that also. So just remember, folks, to do something nice for your neighbors out there, because it's not an easy gig for a lot of them. So live every day in an attitude of gratitude, and may God bless.